Good morning, afternoon, evening. I'm your AI host with CBN Financial's market update for Tuesday, December 16, 2025. U.S. equity markets opened under pressure as major indexes experienced modest declines and increased volatility ahead of crucial economic data this week. On Monday, the Dow Jones Industrial Average edged lower, the S&P 500 eased, and the Nasdaq Composite lagged amid profit-taking in technology and AI-related stocks, reflecting lingering concerns around valuations after a strong rally earlier in the year. Investors are closely watching a delayed jobs report and other key economic releases that could influence the Federal Reserve's rate outlook in 2026. Wall Street's cautious tone comes as declines in sectors such as healthcare and energy weighed on sentiment, even as select cyclical stocks and defensive plays showed resilience. Broader market action highlights a rotation as investors balance growth exposure with caution, particularly given mixed signals from labor markets and softer-than-expected business activity data. U.S. business activity growth slowed to its weakest pace in 6 months, with new orders dipping, which may factor into Fed policy expectations and bond yields going forward. AI and tech remain focal points of this market narrative. While tech leaders like NVIDIA saw modest gains, some AI-adjacent stocks and chipmakers faced pressure following earnings and leadership shifts in sector performance. Analysts remain divided on whether the AI-led rally will continue or face consolidation, especially with growing concerns over stretched valuations and potential overextension in some megacap names. Investors will be keeping a close eye on the release of the jobs report, expected to show continued labor market cooling, as well as upcoming inflation figures and retail sales data. These reports could meaningfully impact expectations for future interest rate cuts or pauses by the Federal Reserve. The broader global backdrop also reflects mixed performance, with Asian markets trading lower ahead of U.S. data and currency pressures affecting emerging markets. In corporate and market structure news, the Nasdaq has formally applied to extend trading hours nearly 24 hours a day beginning in 2026, a move designed to improve global investor access, but one that could also introduce new volatility patterns outside traditional trading sessions. Bottom line for today's trading: expect choppy sessions, follow key economic releases, and balance risk exposure as market leadership remains in flux. Strategic allocation across sectors and careful monitoring of macro data will be essential for sound investment decisions heading into year-end and early 2026. Good morning, afternoon, evening. I'm your AI host with CBN Financial's market update.